Good morning, good evening, wherever you are around the world. Got Sean Downey and Jeremy King with you tonight for about 45 minutes. Bright light up there, 45 minutes covering off on the major global markets this week. Last week we had Easter and we missed that. We missed the usual time for our webinar, so apologies for that. Tonight we will be 45 minutes or so. We will cover the major markets. Things are getting pretty interesting. Sean and I just had a bit of a pre-market chat about where we think the markets are at, and in light of the French elections coming up, it certainly looks like markets are set up in a very interesting fashion. I guess when I look at it over the course of the week, we had a big bounce back off quarterly support in the Dow. Tried to retest the high and has effectively failed. So there is some question marks there on the Dow just in the short term. When I look at some of the currencies, the dollar is coming into support, and a lot of the pairs, like the pound and the euro, are kind of failed to take out some major levels on the upside. So there's question marks there, possible reversal on the cards. Bonds, we looked at 30 years prior to the start of this, and they look like they closed just above some critical support, so possibly a bit of base building there in bonds, despite the long-term or the recent long-term downtrend from last year. And then finally, the metals, a little bit of a mixed bag, but we just kind of decided with gold that we looked at the weekly peak from a few weeks ago, and we managed to close over that at the end of this month. So it does actually look bullish, but we'll cover off on those in a bit more detail in a sec. What can you expect tonight? Well, we'll cover those global markets. We'll run through some commentary on stocks, particularly from Sean, and what else are we going to do? I think that's probably it. We'll probably try and keep it a bit shorter tonight. So just without further ado, I'm just going to quickly share my screen and disclaimer. Sean, are you there? Hey, Sean, are you there?
Yeah, sorry, my wife was just asking me about the allotment and whether I want to go and do some rotivating, which I must admit does not. I'm not motivated by the rotivator. I think we can rest assured there.
So just
sorry, I've missed that. So.
No, that's okay. I was just interested, obviously, in what you thought of last week.
Yeah, it was a very interesting week. We had in stocks, we had a lot of good news, bad action. So we've had the crowded areas, which are semiconductors and banks, and certainly on the semiconductors, we generally, most of them are all beat when they did their results last week. And in spite of the market actually being up on the week, a lot of those stocks were actually down. So we got more chinks in the armor in semiconductors. There was a sell signal in one of the ETFs, XSD. So that was interesting for me. Canadian dollar, I did a big report on Monday, I think it was. The Canadian dollar's pretty much gone on the cross rates and on the dollar as well. So that looks like a major trend for me. It's probably a trend that's going to then slingshot back the other way at some point. But big thing on Canadian dollar and also T-bonds. Bonds looked negative all Friday, and then recovered late and actually gave us a daily buy signal. So it held the final support. So as you said earlier, I think bonds look like they're moving higher. Stock market seems a little bit tired. It's not quite given us a sell signal yet. There was UFO signals on Friday, but not at resistances, apart from the E-mini. So it looks like stocks can be down, bonds up, which sort of makes sense, and also the dollar index, which held a major level. For me, what was interesting is something like the dollar index, which has actually been pretty weak all week. but held a very important level. And then you get something against the US dollar against the Canadian dollar where it's making yearly highs. So when the dollar index is actually weak, it's very, very strong against the Canadian dollar. So that makes me even more thinking that the dollar CAD is going to rally. So yeah, very interesting week. Start a new month, so we get a lot of resets on the monthly levels, and we should get some action. I mean, one thing we said just off air before was it's pointing towards a Le Pen win, which made us chuckle a little bit, because I don't think the market thinks that, and it'd be interesting. I mean, we don't know whether she's going to win. I don't really care, to be honest with you, but it's interesting how sometimes our stuff sort of precludes what's going to happen. It's not till June, is it? I think the 8th of June, so it's a long time between now.
8th of May.
8th of May, sorry, 8th of June UK election, isn't it? God, we've got another election. God.
So we've basically got a week.
Yeah, it's next Sunday. Okay, well, very good.
Yeah, so...
Sorry, the market will be looking at opinion polls and that sort of stuff, but they've proved to be wildly inaccurate in other elections. I don't see any difference here. So
yes, particularly with the Brexit, hey? I mean, it's a classic example of last-minute reversals of fortune.
Yes, the polls got it very wrong there. So we'll see. One thing to remember, probably not too many people trade the French bond market, but if Le Pen wins, you would get most bond futures would go higher, but the likelihood the French one would go down big time. So it can go in the opposite direction to what all the others do. So yeah, very interesting. This time on Monday next week is going to be very interesting.
There's actually a yearly sell signal on the French bond already as we right now. But yeah, very interesting. So yeah, I think the takeaways leading us to make this wild guess that Le Pen's going to win were that the bond market closed bullish, the dollar index is at support, the euro failed to take out some key upside levels, and also equities didn't sort of go on with it at the end of the month. So when you put all those four things together, it's not a compelling story. Hence the guesstimate at a Le Pen win. So we might just sort of quickly work through some of the markets first. We'll start with gold. During the week, one Friday, I put a post out on the Facebook site basically saying that gold closed bullish for the month, and I just want to show you why I thought that was. So if we move to a weekly chart of gold here, if I go back to this high here in February, that high stopped right at our upper bullish level, which was 1264.5. Now this month we've closed here around this 1269 level. So if the market was weak, it should have closed back under this high here. So the fact that it didn't and is now at support is a warning for me that gold isn't as weak as you think. We mentioned last month that at the end of the quarter we actually closed above the upper quarterly level and bound there. There's the upper one, there's the lower one. So it does feel like there is a long-term rotation going on in gold, and we do need to be a little bit careful because major lows usually involve some pretty savage spike lows. And when I look at this chart, I don't think I've seen it yet. I mean, this may be the major low, but my gut is telling me it's not. But for the time being, we have rotated on a quarterly basis, and we have held this weekly peak. So for now, I do think gold might be going up in the short term. Here's a shorter term chart of gold. There's the upper annual level that we've closed above. In terms of the volume profile, we closed above that as well. So when I look to the upside here for gold, really the main target is this 1307.8 level. If I come back to the annual chart here. Okay, here's the closing low for 2015. and this is the high attached to that. So that's the 1307.8 level that we think is pretty important, the yearly high from a closing low. I'm half expecting gold now to pop back up to this 1307.8 level. So stay tuned there. One of the signals that we put out through the week off the back of that was Nugget in your GT had a buy signal. It's tested last year's close twice, and it's held with a higher low. Sorry, the computer's thinking. There we go. So this white dashed line was last year's close. We can see it held back here in March, and now it's had a higher low and a buy signal at the same time as the gold market has had this bullish close. So I kind of like this this NUGT for a bit higher in the short term off the back of that. What market should we look at next, Sean? Maybe we'll go straight to Dow Jones and take a look at that. Dow's been pretty impressive for a long time. Last quarter, it took out the quarterly bullish level, closed above. It was overbought in the short term, which is usually what you see. To get a long-term buy signal, you need the market to get overbought in the short term. So here is the upper quarterly bullish level. We closed above it. This monthly upper pivot moved outside the quarterly. It gave us this sell-off, and really that was just into rising support. So this brown rising line here is the previous quarter's midpoint. It's flying straight off of it. But what's interesting is that for the last couple of quarters, we haven't been able to take out this upper monthly bullish level on a closing basis. So there are a few question marks now. Like I would have liked to have seen the Dow above this high this month for this to move higher. It's not. So to me, just a little bit, obviously the major trend is alive and well. No reason to be getting short. The major trend is clearly down here. It's at last year's close, right? That's the level. You need a quarterly close under this 19,750 to cause a real problem. We're up here. The market may well pull back here. I don't know, but the market is strong for me until we close under this last year's close on a monthly basis or a quarterly basis. So, okay, few signs that few question marks surrounding equities, I think is the word. Sean, you might want to just talk to the NASDAQ. I'll just bring it up. You did do a piece on extensions and targets, and I think we've met those targets.
Yes, we have. It was written a couple of months ago in February, so there was some. When markets are somewhere they've never been before, then there's a few occasions I've used Fibonacci. So I used Fibonacci extensions. I took some very big levels back from 2011, projected them higher, and we had a zone of resistance at, let's get my big figure right, 55.60 to 55.64. Now we actually stopped there stone dead Wednesday. Came off a little bit, then Amazon came out after hours on Thursday and pushed it through that level. But the close, which was 55.83, was right at the, you've got it there, it's right at the, I think that's the monthly target.
Yep.
And it closed right on it. So it sort of reached, there was a zone of resistance there. You had that monthly level at 83, and then you had the Fibonacci zone at 60 to 64, and we've closed right at it. So
close under it, actually.
It's just slightly under, yeah, 81, yeah, so slightly under. So for me, most of the major results are now out, so the market has digested all the information. And as I said at the beginning, we got a lot of good news, bad action on individual stocks, which I flagged a lot of them up for the Facebook community on Thursday and Friday. So also the market leaders, if you do XSD, then with the peak levels, a peak moved to the top. This is a semiconductor ETF, so the market leader, and that moved its resistance to the top on a weekly basis and then came off. Yeah, so it was very weak on Friday. and we had some examples of CLAC, KLAC, beat on its results big time, opened, rallied, dumped. Everyone's long, so this is exactly the same pattern that we explained to everybody in banks. They led, and then from about March onwards, early March, the first chinks started to appear, and it just follows the same pattern. I mean, I've been following this for 3-4 years now, and it's ridiculous how consistent this pattern is. They lead, they keep on going, and then the first chinks start to appear where you get weekly resistance moves to the top. Then you get their results, and they come out with great results, and they go down, which is what Goldman's did, for example, and JP Morgan, and it's exactly the same pattern. So as far as I'm concerned, the market leader, which is semiconductors and everything associated with them, that uptrend is over. Yeah, we could have a go at rallying back up. People who are late to the party still think this is a buying opportunity, and so you can you can sort of move back up again. I'm quite happy with that, because all that's going to do is move more resistances to the top, which is what happened in banks. So for me, the market sort of the leader's finished. Something else has got to take over, and it's not clear at this stage what that would be.
Yeah, a few telling signs there.
Well, yeah, you see CLAC, it went to the annual level as well. Yeah, went right to it.
Yeah, that's right. So the high was the first up annual, and so we have broken out from this annual resistance, which is now support. So usually when you see this scenario, you do often get a back test of the breakout zone. So
ends up going back to where it started.
Back to 84 potentially. So if we zoom into the short term, there's that same level there that I drew here, and the support's all the way down here. So that's definitely a fairly decent rejection from a major level.
Yeah, if you do IYT as well, that's the Dow Jones Transports, which has been way below its highs for some time now.
Just pull up the long-term chart.
We had a sell signal back in, I think, that's gone to its annual as well.
No,
sorry, it's CLAC, sorry. Yes, we had a trade safely sell signal a couple of months ago. You can see it there, actually. That when was it? In February. We came off, hit some downside targets, and the interesting thing was we went to that weekly black line on Tuesday, and the following day we got a sell signal. And so the downtrend looks like it's resuming on transports. Exactly the same pattern on the index itself, which is DJT on CQG. I'm not sure where it is elsewhere. Short Dow Jones Transports, basically. And it looks like it can go down to the low mid 150s. That blue target there, that's the first port of call, as it were. And then we'll see what happens after that.
Yep. S&P 500, I'll just put it up. It's obviously going to be a pretty similar story. So once again, it's been 2 months in a row where we're missing these key upper bullish levels. It couldn't even take out the weekly. So obviously long term, the trend is up, but just a few question marks in the short term. Maybe retest support is kind of what it's saying to me at the moment. Obviously moving into next month as well, this is important. When we look at next month, the relationship between time and into next month, okay, that's actually kind of neutral there, so I beg your pardon. I was thinking that this monthly pivot might have been over, but it's not. So the S&P is sort of...
the NASDAQ is.
Yeah, the NASDAQ and the Dow is, is a bit more neutral. That's fine. Might as well have a quick look at the All Ordinaries as well. Yeah, on the SPY futures. We'll actually see the pivots for next month already. Off the back of my head, it was moving into a marginally overbought zone. Okay, so look, and when you look at that, it's closed really strong last quarter. It's taken out the 2015 high. It still needs to take out this major high on a closing basis. It's pretty hard to call that bearish right now. We did close above this big volume profile. However, a couple of warning signs of this monthly upper pivot moving above the quarterly. Whenever I see that, I'm instantly alert for potential moves down. So I need a bit more evidence basically on the All Ords. But big picture, we've put this chart up a few times. If I just call it up, so call up the All Ords. There it is there. So we spent 8 years trying to get out of this triangle. We have now two quarterly consecutive highs above this downtrend line. So the All Ords does look strong on a longer term basis. So really, it's still bullish. There's maybe some overbought signs showing up in the medium term, but the longer term trend is still clearly up. You'd really need a basically close down here to start even blinking at a reversal in the All Ords trend. That level on this long-term chart again was okay. So next quarter that'll be there. You'd be looking at the support down at 56.90. So All Ords is still clearly well supported on a longer-term basis. I might just hop over to currencies. Dollar index. Start with that one. And right down at the bottom of the 1,000 day volume profile, which also happened to correspond with numerous supports from various time frames. And when you see that occur, like you see this semi-annual and monthly and quarterly and weekly, when all these levels line up in time, it's just telling you it's a major level. And then under that, there's Big Daddy, which is the annual level. So this is a key support. We have held it to date. If it did give way, it hasn't got that far to go to the downside. Let's be clear, the long-term trend is up. I'll just get the dollar index for you. Okay, so you can see why from the low here, it bounced off major support. We took out this upper pivot on an annual basis here. We took it out in 2015 and 2016. We just stalled. Okay, so we're just back testing this lower pivot, which is 97.38.4. It's clearly an uptrend. There's that lower pivot there. So really, for me, I would need to see a yearly close under that before I even blinked at the dollar being weak. So we are at the bottom of this volume profile. This is a good place for it to turn around. If you do see a weekly close above the upper pivot next week around here, you're going to be paying attention for a move higher. So a weekly close over 99.50 would be time to pay attention, folks, for a move up. And if we look at the euro now as well, I'm going to give you obviously the opposite story, but let's have a quick look at it. So next month, there's the upper monthly level. Here's the upper quarterly level. That is indicative of a zone where the euro can turn down. So when you see that, it's time to pay attention for a reversal. Doesn't mean it can't continue to go up, of course it can. It's just telling you beware. We did close under this weekly peak. That's another bit of evidence. And long term, clearly the euro is still down in an annual. At the annual and quarterly time frame, the euro is still clearly in a downtrend. If I look at the long-term annual chart, you can see that we've broken support on an annual level, and we're just back testing. So there's the major annual support that we broke at 1.1875, and we're just having a bit of a peak back up here at this sort of 1.11 level. And certainly a failure from here will be telling. Look over the last few months. Back in January we did get this bullish close. on the monthly level, which has kind of held this market together. And again, now we've closed above this monthly level, but the thing is now the monthly time frame, despite having a kind of bullish close, it's a mixed close to me. It's a mixed bag. But now what it's saying is at the monthly time frame, this is the place where it can turn down. So I'm looking for a weekly close lower now under 108.464 as evidence that the euro is turning down. And certainly, if we were to spike up into the French elections up at this 111 level, I'd definitely be having a go at selling it.
Yeah, I agree there. I mean, I think I said before, golden rule of euro trading is never sell weakness. You've always got to sell it when it's strong, because so you've got to be a bit brave with the euro. I'd be all over it up there. I'd be surprised if it gets there. Maybe some opinion poll might get it there. But we've stopped at the weekly level last week, and you've got the dollar index and the euro syncing up together. They're both at critical points at the same time, which is nice. Doesn't always work that way. Obviously, if Le Pen wins, the euro will do the exact opposite to what it did at the beginning of this week. It will just gap lower.
I think it would gap lower in a big hurry.
Yep. Which would actually leave an island reversal, would you believe? Wow. You don't very often get one of them on currencies, that's for sure.
Yeah, that's it there.
Yeah, I mean, if we got an island, I think there's only ever been one on the euro previously in the whole history of the contract. Maybe two. It's extremely rare, obviously, because currencies are 24 hours a day. You can only get them at weekends. So that would be pretty seismic.
That is it's another little interesting thing, isn't it? Just joining all the dots. So when I look through this oversold list into next month, saying euro overbought, pound, and the pound cross is overbought. Now we touched on pound, US dollar. Let's have a quick look at that. Kind of got a couple of mixed signals there. Like on the spot kind of closed just above a critical level. Just bear with me. Yeah, so the spot closed just over a critical level, but then when I went to the futures, it closed just under. So I'm kind of a little bit hesitant about the pound at the moment, and so what that leads me to believe is, well, I'll just cool my jets until I see where the weekly close is next week. But if I put up the pivots for the next quarter, what it's going to show you is the same as the euro. We're starting to move into this overbought zone where instead of these monthly pivots in pink here being inside the quarterly pivots, like that, now you've got monthly pivots above, and that's the place where it can turn down, unless, like here, you get the close above at the end of the month. So here's another instance. If I go back a month where we had this situation where the monthly pivot moved above the quarterly, and you can see what happens. It just sells off, especially when the broader trend has been down. And so that's lining up now here. So beware the pound. It looks bullish. This can sucker punch people badly. So for me, if I see a weekly close under 128.79, I'll be getting short. Interesting also when you look at the pound Aussie, it's hit an extreme level to the upside. It's hit the third standard deviation up on the monthly time frame, which is pretty rare. Doesn't happen very often. The last time that happened in my recollection was for the Aussie dollar at the recent high. So if I just pull all this stuff off and I put up okay, so there it is there. So the pound Aussie has had a big move higher. It's obviously closed bullish, but a bit hard to call a reversal there at the moment. But at anything that gets to third up, you do need to pay attention for a reversal. So watching there, it's taken out this yearly close as well on a monthly basis. So maybe it does go higher, but certainly in the slot for a place where it could reverse quite easily. Looking through that list, there's also the US dollar SEC. I've been in this trade for about a month now. I still really haven't been kicked out. So the original it's just okay. So when we look at the US dollar SEC, it did close bullish last year. It's on long-term. It's in a long-term uptrend. I got excited at this point here, where we failed to close below this monthly bearish, the pink line, the pink lower, and we closed above the weekly upper bullish. It did go up a test last year's close. Since then, it has back tested all the way back to this lower monthly bearish, but has held it. So the uptrend is still alive and well there. And at the back of my mind, I just think straight back to the dollar index and a few of the US dollar pairs. They're all at reversal points. So for me, there's still no reason really to be out of the US dollar SEC trade. And next week, if it was to take out this level here, 8.9189, I'd be adding to it. In addition, one of the other bullish factors with US dollar SEC is now the monthly lower bearish level is under the quarterly bearish, which means it can generate energy to the upside. So the stop is pretty clear now as well. You don't really want it to be closing back under this monthly level anymore, but that will correspond with the dollar index holding. So the line is in the sand. Really, you don't want to see any more lows. You just want it to turn and go up now. And I'll be out under this low. What other markets are there, Sean? What have we missed?
I think got to do. Yeah, Canadian dollar. Might as well just do
US dollar CAD or
yeah.
US dollar CAD.
Yeah, so I did a big report on Monday on the Canadian dollar. On the cross rates, it just broke up. Euro CAD, Pound CAD, Yen CAD. They'd all done it. And for the dollar CAD, it just had this one final monthly level at 136.00, which it closed above for the week. And there isn't anything hundreds of points away to the next resistance. The only thing that's it stopped it at the moment is what you showed on the previous chart was we went to the semi-annual level. And also, not surprisingly, there's a thing called barrier options, very big in the market, and talked about it defending 136 initially. All that has to happen for a barrier option to be exercised, the price has to trade there. It doesn't have to close above it or anything like that. And they failed to protect 136, but they did protect 137 because the high was 136.98. So not surprisingly that we couldn't get over that level. We effectively run out of time. But the other thing that happens is the perceived wisdom of the market is that the Canadian dollar correlates with crude. Well, for the last year, it's only been correlating one way. And what that is when crude goes up, the Canadian dollar does not go up. But when crude goes down, the Canadian dollar goes down. So it's just correlating one way. We're sort of a little bit, doesn't look like anything major is going to happen in crude at the moment. So for me, the Canadian dollar's gone. The targets on the cross rates are a long way away, and doesn't seem to have any friends. The Canadian stock market got slammed on Thursday as well. There's sort of domestic news in Canada. There was a big mortgage company sort of almost went bust. Crazy house prices in Vancouver and all sorts of weird things. Potential trade wars with America. There was a tax on lumber or something, 20% tax on lumber. So there seems to be a lot of fundamental headwinds. I don't particularly care about them, but of course the market focuses on them. And what was interesting, I think, on Wednesday was that Trump said that he wasn't going to rip up the North Atlantic trade agreement. So the dollar CAD was down 100 points overnight, and by the end of the day it was up. So again, it had what would be called bad news, good action, exactly the opposite to what we got in stock. So for me, Canada looks like it's already been trending a lot, but there doesn't seem to be any end in sight, that's for sure.
And this is such a on an annual candle. This is such a typical thing to see, where you get breakout on a closing basis. This is the annual US dollar CAD. It makes a new high, closes lower, and therefore has to come back and test this annual support, which it does. And so this can be a violent place for it to move higher. So this could be an excellent long-term reversal when you look at it from this annual perspective. And certainly some of the targets are pretty distant from where we are now. The current high being whatever it is, 136.50. Then you've got the 2015 high at 140. So really 140 is the next target. And if you've got a monthly close over 140, you're then talking about opening up 147. Okay, so watch and let's see if that one can hold this week. And if it does, then it's clearly breaking out to the upside. What else? Euro pound. Yeah.
So did we do T-bonds?
I
think we did briefly, didn't we?
Yeah, I just forgot the 30 years. So it's always, these annual charts are great because it gives everyone a bit of perspective. It's so easy to get caught up in the madness of the short term. But here's a yearly chart of 30-year bonds. There's the major high from last year. We had a big sell-off. And what's interesting was that actually 2015 was actually the closing high. Last year was just a spike high. So we've back-tested this. We're still under it, but we've back-tested this critical yearly level. So that gives you a view of the big picture. There are some question marks about bonds longer term. It may be that we come back here and have a crack at this 159 level. At best, I would have thought, given the nature of the move that we had last year, this would be an excellent selling place on a long-term basis at 159. If I zoom into the short term, here's your 159 level up there. And the reason we kind of have been a little bit bullish is that we closed, if I go back to last month, there's the end of last month. And so the high over the month was there. And this is where we closed. So we closed over last month's high, which is bullish. And we closed over this volume profile, which is telling you, that just shouldn't happen when a market wants to go down. So there are, and then we had this price signal that Sean mentioned. So, in terms of targets, the immediate targets were the top of the volume profile here and this 155 level. But certainly if we got anywhere near here, I'd be having that would be awesome from the sell side. And that's often what you see, right? When we break down savagely and we, have these big moves down, the market just loves to go back and test the first up bullish level, which is 159.
I think it's a semi-annual level as well.
Yeah. You've got this big annual.
23.
Yeah, that 158 to 159. I'll be looking for one of these little white dot scenarios up here. That's for sure. I'd love to sell that.
Short term up, and if it rallies enough, then there should be a great opportunity to get short this market again. It's interesting in Europe, the Bunds didn't quite make their final resistance the week before when I was on holiday. ETPs, the Italian bond market's been pretty poor. That's always a pretty good barometer of what bonds are really doing. So it looks like we get a relief rally, and that hopefully it's big enough to get us to some major levels at the highs to get short again.
Yep. And I'm actually, I was talking to Sean about this before we started, but sugar, there's a big opportunity, I think, in the offing. It's not quite there, but let me just call it up. Top of the weekly chart, sugar. And then add in these pivots. Okay, so there's the downtrend channel. Oh, what's going on there? Okay. So nicely within this downtrend channel, the thing that I like is that last year we closed here. Last year we closed here, which is above this annual bullish level. And now we've come all the way back down and tested the annual bearish level, which is often what you see when you get annual buy signals, which just reverses back and tests the lower. And it happened, we've touched this lower trend line perfectly. We are overextended. This quarterly pivot is underneath the yearly pivot, and if you zoom into the ultra short term, you're talking about a move back up here, up to the top of the channel. It's a long way. And if we look on Friday, there was actually a daily buy signal, I believe.
Yes, there was. There was a power play buy.
Yeah, so good opportunity in sugar, folks. And very interesting when I look through this scan that I do that tells me on a longer term basis which markets are starting to show reversal signs. You are seeing, like we've got rice in here. You've got what's LRC? That's coffee.
Yeah.
You got the coffee. So there's a few. And there's cocoa as well. It's like a commodity. There's a few elements of the commodity suite that would appear to be in a position where they can turn. So sugar looks like a pretty good one. If I just go into the short chart, sugar. Okay, there it is. So this is beautiful. I like this because for many reasons. One, we've held this monthly critical level. Two, we're overextended by virtue of the fact that the quarterly bearish is under the yearly bearish. Three, next month, we've got this monthly under the quarterly, which is another slingshot potential move up lying in weight. And three, well, it's really those two things. But so look, for me next week, I'm looking for a close back above this weekly peak, which happens to coincide with the weekly upper pivot. So I look for a weekly close above 1604 next week to get involved in sugar. Looks pretty exciting for a move up.
Do you want to just call up the main stock that's exposed to it, which is CZZ? Just do your analysis on that, because that's pretty interesting as well. So if people can't trade sugar, you can basically trade this stock, which is very closely correlated to what the price of sugar does. We did look at it a while ago, a few months ago. Sugar was interesting. The thing that's happened there is if you do a daily, I think there was a daily buy signal on Friday, same as what there was on sugar itself, yeah. And we didn't close below the weekly peak. We pretty much got to the monthly level, and yeah, we did. Yeah, so we went straight to it. And there's not much above. There's no peak levels close. The nearest one's at around 865, so that's $1 higher. So there's space for it to move, and it's pretty clear.
Some big gaps opening up there. So
yeah, above 10, then it really can rock. So that would be the one to trade for looking for that exposure to sugar. It's also very easy to know where you're wrong. really don't want it closing below last week's low. It's pretty easy.
Yeah, you definitely want it to. Exactly right.
Yeah,
Shouldn't go under that low.
Exactly. So it's a good example where your risk is clearly defined and is relatively low, and the upside is considerable if the whole thing gets a grip. And of course, it won't move with the market. It's going to move with sugar, so you don't have to worry about the stock market necessarily going down. That stock will do its own thing.
Just have a quick look at some of the energy markets. Start with nat gas on a yearly basis. It is actually the point where, it's been dragging on the bottom for a few years now. Took out this upper level last year. Has held the pullback, and really it's got some big upsides opening up. So I'm fascinated to watch nat gas. I think it's something that could do some serious damage to the upside if it wants to. There's a critical level here down at 3.14. If we zoom into the short term, we had the opportunity at the end of last quarter to take out the bearish quarterly level, and we didn't, and we held that. And so now, so there's the quarterly bearish. We closed above it. So now, at the end of this month, we have held a decent level here. So watching for this to move higher. When you look at that natural gas yearly chart, there is some big gaps opening up. So it's at a pretty vital spot right now, but certainly take out this pivot next month or the next monthly upper pivot. Hang on, let me just put it on. Okay, there it is there. So you take out 34.60. So it's not even overextended. The market's like perfectly in equilibrium. And when you see that, so by that I mean the weekly is inside the monthly is inside the quarterly. When you see that, it's telling you the market is not constrained on a time basis. It can go a lot higher. And last year we took out this upper level. So watch out. This thing can go crazy up and test this upper level here. 466. No problem. So yeah, first things first, looking for a weekly close over 33.84 to continue the long-term uptrend in nat gas from the 2016 low. In terms of oil, oil, they've had a beautiful bounce off support. Took out the yearly bullish. Is retesting support as we speak. Hasn't done any damage at any of the high time frames. Certainly the memory that the monthly, quarterly, and yearly uptrends are in place. So let's just have a quick look here. So last quarter, that was the opportunity for it to be bearish down here. Missed it by a country mile. And since then, it's, oil this year has been about a battle with last year's close. It's spent the entire year fighting with 53.84, which was last year's close. And once you get like a monthly close over that, then that will be the key. Right now, we didn't take out. We couldn't close under this monthly bearish level there. We couldn't close under it here. It's still in an uptrend, and it's taking its time. But I've got nothing there telling me to get short oil.
No, it just failed. We mentioned it on the inner circle. We had 54.77 and the high was 54.76 a couple of weeks ago, just before I went away. So it failed at its second to last resistance, but the fact that it got that high to attack it tells you something about the underlying nature of it. And as you say, there's no reason to be short. There's not much reason to be long at the moment either. unless we get some sort of daily signal appear.
Yeah, I mean, you can kind of understand it as well when you look at this annual chart. You're kind of floating around in a bit of space there, and that's exactly what oil's been doing. When you think about it, we've just been wafting around, pretty big swings, but we're wafting around in space. And you can see the space when you look at that annual chart. That's why we're wafting around. But make no mistake, we've held support and we've taken out a yearly bullish level. So don't be fooled into thinking it's immediately bearish until you get like a decent, you need to get like at least a monthly bearish close. And that has not happened for ages.
No. The other thing, when you look at the annual chart, I know we're at end of month 4, yeah? Look how narrow the range is compared to even when oil was at $20, $25. The range, we are not going to stay within this range. It's not going to happen. It's way too narrow. So something has to give at some point during the year. At the moment, there's nothing telling us to be short. I did it as the big report at the end of the year, end of last year, and it was actually the thing that I thought could move the most in the year, and at the moment it's probably moving the least. But when you look at that range, you think to yourself it's unlikely. The other thing that happened when we went up towards the highs was the funds were very, very long already. So you wonder about how much more participation there can be. I don't really worry about that too much because the limits of participation can change. But what this move lower has done, it's kicked out a load of weak longs, which is good. Means that there is potential fuel later on when people lose money earlier on. So, at some point, crude's going to get interesting.
Yeah. Yep. For me to be bearish, we are the next sort of major targets. You're talking about the end of next month, and then you're talking about the end of next quarter. So that's clearly putting you into this. To be bearish, you're going to be having to, take out 42 at the end of June, and if that happens, fine. Then we'll look back at this chart, and then all of a sudden we're retesting this lower annual pivot there. But right now, you stay bullish until the market tells you to go the other way.
Yep. Okay, I think that's it. Yeah.
Yeah, all right, folks. I think that's it. For anyone new that's watching, don't forget all these signals and commentaries available on our software, Chart.IQ. We've got our Trading Safely online group where we cover all this stuff live, and we are developing right now a new interface on our Trading Safely homepage that members will be able to access. It covers all time frames and does all sorts of wonderful things that we're working on now. So stay tuned there, and all the information you need is on www.tradingsafely.com.au. I think on that note, I'll sign out, and we'll look forward to talking to all our members sort of tomorrow. So, Sean, any final words?
No, should be a good week. Remember about Le Pen, and see where we are on Friday is going to be pretty important ahead of that election. So be a few positions getting put on. I think I'm going to get long some bonds. I'm already long the dollar and in the Canadian dollar, and be watching the euro pretty closely, I think. So interesting week, and also stocks as well, with most of the results out of the way.
Expect volatility to be up this week, folks, so don't forget, stops should be on a closing basis. Be careful about intraday spikes, and trade safely.
Okay, goodbye everyone.
Thanks, Sean. Thanks.
All right, cheers, Jeff.
All right.